Good evening and welcome everyone to PW Only IAS English. We are going to do the complete budget analysis for budget of 2025-2026 and we are going to see what is in the budget for examination point of view, from the common man's perspective, what is there in the budget, from the salaried people's perspective, from the senior citizens perspective, for women entrepreneurs, for youth and for agripreneurs, the Annadata of India. The budget uses four terms: Garib, Annadata, Youth and Nari. Utilizing the power of these four constituents of our economy or of our democracy, the budget seeks to focus on democratic or domestic growth, inclusive growth. Domestic growth led model is going to be peppered through or has been peppered through all through the budget speech, because we are facing the downturn or pessimistic scenario in the international economic arena. Donald Trump and the protectionist policies, then India-China rivalry, then Russia-Ukraine war, all these factors made the government to focus more on the domestic growth-led model this year. So we see revival of the packages for MSMEs credit guarantee, so that MSMEs can be given more loan. Then we see focus on footwears. Then we see focus on pulses and dal, agriculture. Whenever it has been observed that global headwinds are against the economy, Indian economy, then at all such times during COVID and otherwise also, government has always sought to revive the agriculture sector. Agriculture sector, which otherwise accounts for 3 to 4% of GDP or has been growing at the 3 to 4% growth rate, that agriculture sector comes into limelight whenever the trade scenario, international economic scenario, manufacturing, service sector curbs or increased taxes on these items have been witnessed in the global arena. So this was a brief introduction. Let's jump into what the numbers say. As you can see here, the PPT, I'll ask the team to share the PPT on the Telegram channel, Jatin Verma, PW Only IAS. Pensions, rupee will go to, rupees first of all comes from income tax. 22% of the money that government is going to spend comes from income tax. So we always see in UPSC as to how much of the money is coming from direct taxes. So 22% of the money comes from income tax. Then union excise duties. Excise duty is going to contribute 5%. I'm trying to write things down so that you can mug things up or you can make cursory notes right away if you are appearing in prelims 2025 or preparing for 2026. You would get a fair idea how to decode budget, how to study budget when it comes to your examination preparation, right? So let's begin quickly. Then your GST and other taxes, GST accounts for 18%. GST and other taxes account for 18%. Corporation tax, another element of your direct taxes, accounts for 17%. Corporation tax, money that is every rupee that is coming out of 50 lakhs, 65,000 crore rupees is the total budget. Out of this 50 lakh 65,000 crore rupees, 22% is going to come from income tax. 17% it is estimated it is going to come from corporation tax, the tax charged on the companies in India. Then excise duty 5%, GST 18%. Then your non-debt capital receipts. What are the examples of non-debt capital receipts? Sale of shares in public sector undertakings, in railways, or dilution of the shares in the banking sector. All these things come under non-debt capital receipts. Or monetization of assets. What is monetization? Government will lend these assets to private sector for a lease of or on rent for 99 years. In layman's language, I'm explaining things. Non-tax receipts. Non-tax receipts means receipts in the form of profit declared by public sector undertakings, including public sector banks. So borrowings and other liabilities. So 24% of the money out of 50 lakh 65,000 crore rupees, government is going to borrow 24% in the form of small saving schemes, in the form of borrowing by the government from RBI, market borrowing included. So this is how 100% of 1 rupee is distributed or is collected by the government of India. Now, how this money is going to be spent? On the previous interest payments, whatever money government borrowed in the past, interest payments 20% of rupee will go. For every 100 rupees that the government is going to spend out of 50.65 lakh crores, every such 100 rupee, of this 100 rupee, 20% will go towards payment of legacy debt, interest payment, not the principal, only interest payment. Central sector schemes. So centrally sponsored schemes and central sector schemes. Central sector schemes 16%. Centrally sponsored schemes is going to be 8%. Okay, major subsidies, the subsidies that government of India is giving, again 6% will be incurred. Defense, of the budget, 8% is going to defense. Thanks to the adversarial neighborhood that we have, thanks to India-Bangladesh issue that is going on, thanks to what aid are we giving to Maldives, Sri Lanka, to keep the neighborhood in good humor, plus to prepare ourselves in terms of our naval arsenal, army, air force preparedness, defense preparedness. Thanks to the increased budget of China, we are also going to allocate 8% of our annual budget, this year's budget, to defense. We can use these small points towards our, what? Answer writing, as to how much of budget outlay was given for this thing. Now, Finance Commission, under Article 280, we all know that government gives money to the states. Center gives money to the states. How much of it? Finance Commission, every year. Finance Commission is appointed for 5 years, but the money that is allocated out of the annual tax collections is obviously going to be paid in the annual installments for next 5 years. For this year, 2025, of the total 50.65 lakh crore rupees, 8% will go towards Finance Commission. Okay, centrally sponsored schemes, as I said, central sector schemes, government is going to spend 16%. For centrally sponsored schemes, which are the schemes sponsored by the central government, but state governments also contribute up to like 40%, 60-40 ratio. So for such schemes, government is going to spend 8%, right? We all know that because of 14th Finance Commission, a lot of money was directly given to the states through the Finance Commission. Ever since then, the number of centrally sponsored schemes and the amount of money, the percentage amount of money spent through annual budget of the union government going to the states through the centrally sponsored schemes route has come down. Centrally sponsored schemes have been slashed in number. It was B.C. Chaturvedi committee way back in 2012 when Planning Commission was there. They had suggested that we should cut down the centrally sponsored schemes because these centrally sponsored schemes give an impression of interference in the domain of state governments. So many state governments used to resist this thing. That is why the government of Modi has reduced the number of centrally sponsored schemes, and the amount of money that is going to be spent through centrally sponsored schemes has come down to just 8% of this year's budget. Whereas central sector schemes are those schemes which are funded 100% by the government of India. Okay, they are the schemes on the subjects given in the union list. So on these schemes, when it comes to budget this year, 16% of the money is going to be spent. 16% of 50.65 lakh crore rupees. That is the size of the budget, the total receipts of the total expenditure of the government of India. Okay, so this is how the pie is divided. Pensions, 4% of the money. Other expenditure, payment of salaries, administrative expenses, 8%. This is how, as I said, 20% is going to go into the interest payments. Please let me know if I am being too fast, if it is too fast for you to comprehend, or if you have any doubt. I am keeping a tab on your comments also side by side. So just let me know if in case you get stuck anywhere. Anywhere means anywhere if you get stuck, right? Let me just open your doubts and your comments in front of the screen that I have. Yes, I can see now Sahil, then Anshu, then Sham Divedi. Okay, now coming here, total receipts for 2025-2026. Total receipts other than borrowings. Now see, as I said, 24% of 50.65 lakh is going to be borrowing. Okay, 24%. Rest of the money is going to come from other receipts. That means 35 lakh crore rupees is something that government is going to collect on its own without borrowing, right? See where India has come. 35 lakh crore rupees. Okay, now the gross and net market borrowings through dated securities. Okay, the government is going to borrow money from market through dated securities like national savings certificate, etc. This is around 15 lakh crore rupees and 11 lakh crore rupees respectively. That is market, the gross borrowing and the net borrowing. Gross means borrowing. What do we mean by gross borrowing? Gross borrowing means borrowing being done to retire or to pay off the existing debt. Okay, but net for this year, government is going to borrow only 11 lakh 50,000 crore rupees. Otherwise, out of this, approximately 3.5 lakh crore rupees is going to be used for payment of the existing loans, existing market securities borrowed money. Okay, the net tax receipts are estimated to be at 28 lakh 37,000 crore rupees. So 28 lakh 37,000 crore rupees will come from this route, right? Now, are you able to see this? Revenue receipts, then capital receipts. You see here a beautiful pattern. Okay, let me tell you one thing. How many years data does the budget contain? This has been the question in UPSC prelims and on other examinations also, state PSC, BPSC and other exams. So how many years data is there in the budget? Okay, see actuals of the previous year, that is 2023-2024. Now we are in which financial year? 24-25. Budget contains the data of 3 years, actuals of the year, that is 2023-2024, the year that ended on 31st March 2024. One data is this, actuals, then revised budget estimates of 2024-2025. Okay, budget estimates of the year that is going on, right? That is, I mean, now this revised data comes, government while introducing the budget of 2024-2025 on 1st of February 2024 had said that revenue receipts will be this much, 31.3%. Okay, but now that we have some revision, we have revised estimates of 2024-2025. Okay, so you can say that number one, budget contains the actuals of the previous year, that is year 2023-2024, actuals of this year, revised estimates of 24-25 this year, then budget estimates of 2025-2026, the year that is going to start from 1st of April 2025, right? So actuals, revised and budget estimates. Budget estimates for the year for which budget is being presented, revised estimates for the year which is going on, actuals, we have the actual data for the year that closed on that financial year that ended on 31st March 2024. Got it? Now moving further, this ratio is like going upwards only. Okay, revenue receipts have been increasing, which is a good thing. Okay, but this year revenue receipts, what they were projected for, they have gone down. Revenue receipts were expected to be 31. That means recurring receipts of the government of India, the rent, the profit that it gets from the public sector corporations, public sector enterprises, it was expected to be 31.3%. But it is going to be 30.9%. Okay, marginally lower than what it was expected to be. So these facts are important. While you are preparing for the IAS exam, you are going to be a collector or secretary, you should have the pattern in mind. Question will be, the revenue receipts in the revised estimates presented with the budget are expected to be lower than what they were budgeted for, what they were expected to be when the budget was presented on 1st of February 2024. Okay, so this will be the question, whether revenue receipts have been more than what they were expected to be or they have been less. So the answer is they have been less. Okay, now what are the revenue receipts expected to be this year? 34.2%. What are the examples of revenue receipts? Income tax, because government collects income tax every year. Corporation tax, okay, money from GST. Then public sector enterprises dividend. Government is a shareholder. Government gets the share in the profit of public sector enterprises. Through all these resources, through all these sources of income, government expects to collect 34.2% of the budget. What is the budget size? 50,65,000 crore rupees. Okay. Now coming to capital receipts. How are capital receipts realized? Number one, disinvestment, sale of share of PSUs can be one way. Okay. Then borrowing can be another way. Then we talked about asset monetization. Government is monetizing the land of railways. Monetization means how? Government is going to lease, give it to lease, give it on lease to Adani, Ambani, airports on lease, railway tracks which were constructed by railway corporation or railway ministry, they are going to be given on rent to private players so that they can make their trains run on those tracks, and they will in return pay some money to the government. Okay, so if this is a one-time affair, this will be capital receipts. Capital receipts are one-time in nature. If it is a disinvestment, government is going to sell the shares in its public sector undertakings. All these things, they account for 16.4% of the budget this year. Okay, now are they increasing? Here also the data is of 3 years. Actuals of the previous year. Previous year means we are in which year? Ongoing year. Okay, revised estimates of which year? The year that is going on, 31st April 2024 to 31st March 2025. Then budget estimates of the year for which the budget is being presented. Simple to memorize. This is the data. 16.4% is going to come from capital receipts. Okay, now total expenditure, this is how the expenditure is calculated or presented. Revenue expenditure is going to take away 39.4%. You tell me quickly, any of you who's watching must be knowing this, how much is the revenue expenditure? How much is the revenue expenditure for what is good? Revenue expenditure, more of revenue expenditure better than the capital expenditure, or is capital expenditure better than the revenue expenditure? Please answer. Which type of expenditure is better? Please quickly answer, those of you who are watching it. Always money spent in creating new assets, that is called capital expenditure. So always capital expenditure is considered to be better than revenue expenditure. Revenue expenditure means payment of salaries to the government employees. Okay, payment of salaries to the government employees. Okay, payment of salaries to the government employees. Then repair and maintenance of the roads that were constructed in the previous year, maybe existing railway tracks getting repaired, existing railway wagons getting serviced, okay, railway coaches. So everything that was constructed in the previous years, maybe 2019, 2018, the roads that were constructed, repair of those roads. So revenue expenditure, some part of revenue expenditure is good, some part of revenue expenditure is bad. Insofar as subsidies that are being paid, if they are getting leaked, if they are being siphoned off, if they are being taken away by the people who do not deserve LPG subsidy, for example, then it is bad. But the amount that government is spending in the upkeep and maintenance of new assets, guys, okay, I mean the assets created in the past, don't you think that their life will increase? If there is an old bus or railway track, if it is repaired, well oiled or well greased, its corrosion will go down, depreciation will go down, its life will increase, right? So this is there. Okay, this is a, see, on the face of it, it seems that revenue expenditure is bad. But revenue expenditure can be divided into two types. One part of the revenue expenditure is wasteful, and another part of the revenue expenditure is productive. What has happened? Okay, and another part of revenue expenditure is productive. Wasteful revenue expenditure, government is trying to bring down the wasteful revenue expenditure. How? By direct benefit transfer, by linking Aadhaar, by identifying ghost beneficiaries, by revising the criteria of socio-economic caste census to be implemented for giving the subsidies. So these are the reforms that the government is bringing about to strike a fine balance between revenue expenditure and capital expenditure. Subsidies, unnecessary subsidies on diesel vehicles, on diesel as a fuel, which was meant for agriculture. But then we see Fortuners, Endeavours, okay, big cars, diesel guzzling cars, which consume a lot of diesel and give us pollution also. So government banned the diesel subsidy in the year 2014, thanks to the Modi regime, right? So this way revenue expenditure is brought down, it is rationalized. So never have a definite answer that revenue expenditure is always bad. Got it? Then how much is going to be the revenue expenditure this year? 39.4%. Okay. Then how much is going to be the capital expenditure? 15%. Effective capital expenditure. Okay. Why the word effective? That means expenditure which the government is going to incur by after the repair and maintenance of the assets, etc., after paying off some debt, etc., or after after discounting for the money raised through sale of public sector enterprises shares. Okay, so that money will be deducted, and then we will arrive at a figure which is called as effective capital expenditure, right? So total effective capital expenditure this year is going to be 11,22,000, and effective capital expenditure is going to be 15.48 lakh crore. Okay, so this is the difference. So effective capital expenditure is going to be more than the capital expenditure. Here, effective is still better than just the capital expenditure. Effective capital expenditure is going to be 15.48 lakh crore rupees. Okay, now moving further, deficit trends. As I said in the previous budget highlights 10 highlights lecture also, this year fiscal deficit, the excess of government's expenditure over government's income, is going to be 4.4%. 4.4%. What does it mean? That means for every 100 rupees that the government is going to spend, it is going to spend 4 rupees extra, 4 rupees 40 paisa extra, for total of 50,65,000 crore rupees. Imagine, for every 100 rupees 4% extra. That will be a lot of money that the government is going to spend by borrowing. Okay, that means government's revenue expenditure and capital expenditure is not matching. Government's own money and government's borrowed money is increasing. But thanks to the rationalization, thanks to the fact that we are able to rationalize our expenditure, see this line coming down. Revenue deficit, fiscal deficit has been coming down year after year after COVID. Okay, in the aftermath of COVID, during 2020-2021, our fiscal deficit was 6.7%. So now it has been brought down all through these successive years. As per the revised estimates of year 2024-2025, the revenue deficit is going to be 4.8% for the year going on. 24-25. Okay, it is further sought to be brought down to, as per the budget estimates, it will be further brought down to 4.4%. How is the question going to be asked? How are we supposed to analyze this data? Can we say that over the last 4 years, revenue deficit has been coming down? Yes, 2021 it was 6.7%, 2022 6.4, 2023 2024 5.6, 24-25 4.8. So if the question comes in the prelims, is the revenue, is the fiscal deficit coming down year after year? Answer will be yes. Okay, so this is there. Okay, so this is there. Now coming here, what is effective revenue deficit? A very interesting term I would like to explain, otherwise I would not be doing justice with you guys. That part of revenue deficit, even though revenue deficit, as you guys now know, is bad, that part of revenue deficit, okay, which is given to, let's say, states, revenue expenditure given to states, revenue expenditure. If the states were meant to see, money given by the center to the states is revenue expenditure. Money that the state center is required to give to the states is revenue expenditure for the central government. But if that money, which expenditure covers freebies, it is revenue expenditure. Okay, now sir, growth in capital receipts, good, it is good for the economy. Okay, now here center giving money is revenue expenditure for the center. But if states are good, if states are rational and they spend this money on capital goods, on purchase of new buses, on purchase of electric vehicles, for example, okay, so, or on purchase or construction of new roads, so that will be deducted out of the revenue deficit of the center. Effective revenue deficit formula is revenue deficit minus money spent on capital goods or capital assets by the states. States good expenditure, states capital expenditure out of the revenue expenditure. Revenue money given to the states as a part of their taxes, as a part of their revenue income, if the states spend that money in a good way, green arrow you can see, that will be considered as a reduction from the center's overall revenue deficit. Understood? So this is the good thing that is happening. That is why effective revenue deficit as a term was introduced in the budget. Okay, but the certain finance commission said, 14th finance commission said that since this is a good deed, revenue expenditure of the states being spent on capital assets is a good performance of the states, not the center. So why would the center project it as its good thing? It is the good thing on the part of the states, not the center. So 14th finance commission said that central government should not show effective revenue deficit in its budget calculations. All right, point is understood? If yes, please let me know, right? So this will be good for you. Okay, so this is there. Now coming to this part, 4 point, see here, fiscal deficit, it has been reducing. Then in the COVID-19 years, as I said, it went so up 9.2%. In 2021, it was 6.7, 22-23 6.4, then 5.6. Likewise, for last 4 years, it has been coming down only. This is how UPSC also knows that you are preparing for a senior service. If we talk about UPSC or state PSC also, so they ask just a trend for the last 4 or 5 years. They don't ask the exact number, but for last 2 years you should mark this up. Overall trend you should know. In the COVID, just to revive the economy, the revenue expenditure, the revenue deficit had gone up, fiscal deficit had gone up. Okay, you see this A curve. है ना, because it is simultaneously, it is co-terminus with the COVID years 2021, 22. Both the years COVID had affected India's growth story. After this thing, government is trying to bring it back in a gliding path format. Okay, because of this excessive expenditure by the government was able to, economy was going on like this, GDP growth was going on like this, government was able to revive India's growth story. 2021, 22. Government, by increasing the expenditure, as we see here, was able to revive the GDP growth rate. If the government would not have done this, our unemployment rate, our decline in GDP, increase in inflation, all those things would have happened. So government did a good job for that thing. Got it? Now, this is the data. Now, what are the other deficit data saying? Fiscal deficit is 4.4% for this year. Revenue deficit for this year is going to be 1.5%. That means revenue deficit formula is revenue expenditure of the government is more than revenue income of the government by 1.5%. Okay, by total 1.5% of the GDP. All right, these are the figures based on GDP. Now, what is effective revenue deficit? It is 0.3%, because money given to the state governments, out of the money given to the state governments are spending more on the tax, assets, capital expenditure. That is why there is a difference between effective revenue deficit and revenue deficit. Now, what is primary deficit? Primary deficit means if government would not have borrowed to pay for the past debt, to pay for the borrowing that the previous governments have done from 1952 onwards, 1951 onwards till 2024. All the financial years, their EMIs, loans the previous governments have borrowed, their loans have to be paid. If those loans would not have been paid, government's deficit would have been only 0.8% of this year's GDP. Got my point? You are paying the EMIs this year to the extent that your fiscal deficit increases to 4.4%. But out of all the expenditure, if we subtract this previous debt, our deficit is just 0.8%. So this is a good indicator. Okay, that means this year government is borrowing less. It is only because of the excessive borrowing in the past. Maybe COVID years, maybe Congress government had borrowed, maybe previous year Modi government had, previous term 2014 to 2019, 2019 to 2024, Modi government would have borrowed. Any governments did any kind of borrowing in the past, due to its burden, our revenue deficit goes high, our fiscal deficit is higher. If this burden would not have been there, the deficit would have been just 0.8% of GDP. Good thing. So you have a fair idea now, what do we mean by fiscal deficit, what do we mean by revenue, primary, effective. Okay, so how to study budget? These numbers have to be crunched. You should understand. Now quickly, things are not as clear here. Now we have got the rhythm, we've got some, you are also interested in knowing things now. Okay, so since you have come this far, let me take it to the next level. How to study budget? How many parts are there in the budget? Let us see this way. For our UPSC Civil Services exam point of view, how are we supposed to study the budget? First thing, we have to see the fiscal numbers. Okay, fiscal numbers, what do they say about it? Fiscal deficit, revenue deficit, etc. Fiscal deficit, revenue deficit, then your primary deficit, these numbers. Then we have to see schemes in the budget. Okay, schemes in the budget we have to study. You should memorize this or retain this in your mind. Then this is further divided into two parts: new schemes, old schemes continued with excessive budgeting. New schemes and old schemes. Okay, new schemes and old schemes data. New schemes should be focused more for prelims as well as mains. for prelims mainly. Old schemes, if they are seeing increase in the funding this year, if new schemes are getting increased funding, old schemes are getting increased funding, Swachh Bharat Mission, etc., then for mains, they become important. Critically analyze smart cities mission. If smart cities is getting additional outlay, for let's example 4,000 crore rupees. Okay, now this is how you have to see schemes and programs. Makhana board, an institution, new institution being set up. What is the advantage of makhana? What are the nutrients derived from makhana? Apart from the religious value or festive value of it, what is it made of? Got it? New pulses mission. What are pulses rich in? Why India's green revolution has not been able to increase the growth of pulses? Getting my point? Schemes and policies divided into new and old schemes. Focus on new schemes for prelims, focus on old schemes for mains, because if they are old enough, an analysis is required for them. Manrega, Swachh Bharat Mission, Smart Cities Mission, Namami Gange, if they are getting additional funding, then only you are required to study them for prelims also. Otherwise, there is no need. Midday meal scheme, etc. Right? I'm trying to lessen your burden by telling you this thing. Now, schemes we have studied, then comes the conceptual part, key terms in the budget. What do we mean by effective revenue deficit? This is the conceptual part. Okay, concepts. Concepts, you should have good command over the concepts, because concepts are evergreen. Tax expenditure, certain terms I have shared on my Telegram channel, Jatin Verma PW Only IAS. Okay, the link of Telegram is given in the description box. Yes, high in protein, fiber, all these things you should know. Makhana. Okay, key terms are, what do you mean by tax expenditure? What do you mean by crowding out of private sector investment? What do you mean by input tax credit? All those terms you should be having a good command over. What do we mean by these deficits, primary deficits, etc.? These are the formulae, key terms and formulae. Okay, then comes the constitution and your budget. Article 112, 113, 113, all these things you should have a good command over. So fiscal numbers, fiscal deficit, revenue deficit, this also includes FRBM Act, Fiscal Responsibility Budget Management Act. You can include it either here or here. Polity and budget. Okay, so this is how, if you divide the budget, part A is fiscal numbers, revenue deficit, etc. Part 2 is schemes, programs and new institutions being created by budget. Concepts, Keynesian theory is being applied, private sector led growth model or public sector led growth model, or government is going to follow the trickle down theory or not. Government is going to, then another angle you can look at it is, you can have the fifth point, sectoral allocations, defense, education, women empowerment, okay, social sector. This is how you can look at the budget, social sector schemes, etc. This way you will be not leaving any stone unturned if any question comes from the budget. And budget and economic survey, they give you a lot of fodder material to substantiate your viewpoint on things, on various answers, apart from their value and importance for prelims, right? Now, moving further, see here, budget size is 50,65,000 crore rupees for this year. Okay, schemes expenditure, we had seen that government is going to spend on centrally sponsored schemes and, just a minute, centrally sponsored schemes and central sector schemes. So total expenditure is going to be 21,64,000 crore rupees. Okay, out of which central sector schemes are going to get 16,22,000 crore rupees. Then this general services, within the schemes, some institutions, some boards have to be run. For example, planning board for schemes, Niti Aayog expenditure, administrative expenditure for schemes, paperwork, etc., general services, economic services. Okay, so these schemes are going to be looked after by Indian Economic Service officers, etc. Administrative expenses. Then Out of this central sector scheme, out of 16,22,000, subsidies are going to account for 4.26%. Okay, social service sector schemes, again central sector schemes 0.67. Then out of this subsidy, petroleum subsidy is going to be 0.12%, food subsidy 2.03. Okay, food, fuel and fertilizer subsidies, they used to account for a predominant share in the government's fiscal deficit, triple F as we used to call it, food, fuel and fertilizer subsidy. So how much is the total money going? 1.68 plus 2.03 plus petroleum. So government has successively brought it down by coming up with this rationalization of these schemes. How the fertilizer subsidy has been rationalized? Neem coated urea or Aadhaar based disbursement of subsidy, cash subsidy. Rather than giving money to the fertilizer companies to produce at a subsidized rate, government is coming up with the soil health card, nutrient based soil health card based application of subsidies, nutrient deficiency based application of subsidies, so that a soil which is otherwise rich in potash is not over fertilized with potash again. Okay, so what are the steps taken to rationalize subsidies? Fuel subsidy, as I said, fuel subsidy is now abolished. No subsidy on petrol, no subsidy on diesel. Petrol subsidy was abolished in 2010. Diesel subsidy abolished in 2014. Okay, then comes your food subsidy, National Food Security Act, Antyodaya Anna Yojana. Again, decent amount of subsidy is being given. That is why you see the number 2,03,000 crore rupees. Okay, so transfers, establishment and other expenditure. What do we mean by establishment expenditure? Out of this budget, 50 lakh 65,000, 29 lakh 1,000 crore rupees is going to be allocated for transfers, means direct benefit transfer, etc. Okay, and then establishment expenditure. Establishment expenditure means expenditure on salaries, etc. Yes, there is no income tax up to 12 lakh rupees income. So this is a huge relief for the middle class. Okay, now other central expenditure, 15 lakh 26,000 crore rupees. Autonomous bodies. What are autonomous bodies? RBI, SEBI, Insurance Regulatory Development Authority. In the payment of salaries, CAG, UPSC, right? 1,30,000 crore rupees in the conduct of examinations, RBI, all these autonomous institutions, even Central Vigilance Commission, etc. To the extent, right? Interest payments out of the total expenditure, transfers, etc. 12,76,000 crore rupees. The primary deficit that we were talking about, the interest payment thing we were talking about, 20%. Okay, this is going to go here. So this is how the money is sent. Transfer to states amounts to 5,08,000 crore rupees. One part of the transfer to states is transfer to states. There are two parts to it. One part is Finance Commission grants, okay, Finance Commission transfers, and the second is other transfers. Okay, Finance Commission other transfers means centrally sponsored schemes, etc. Finance Commission transfers are constitutionally required. Finance Commission transfers given by the union government to the states are constitutionally required. They are charged on the Consolidated Fund of India. UPSC had asked question on this. So this graph and everything, allow me 1 minute to share it on the Telegram channel quickly with you guys, so that you can quickly refer to the page numbers. Is it fine? I think that will be helpful for you. We as a team, thanks to the support by PW team and my efforts to an extent, we have spent a lot of effort on this. So hope you guys will read it and refer to it as the only source for your budget preparation. All these schemes, this is a 100 pages, 100 slides PPT. Bulky document, but will ease your burden nonetheless. Okay, I'll share it once it is downloaded and converted into PDF. Okay, so you can refer, because some of the text is very blurry, and thanks to the light that is coming here, excessive light, okay, so that I should look good and fair, that is why you might not be able to read it or comprehend on the screen. So here we go, detailed budget PDF shared on the Telegram channel, Jatin Verma Sir, PW Only IAS. Okay, so now establishment expenditure, other transfers, salary, pension, others. Okay, so this is how the expenditure. I hope with my little efforts you are able to understand a little bit of budget, small saving, how the government is going to collect this money. Budget size is this much. Tax receipts are going to be 28,37,000 crore rupees, out of which capital receipts are going to be 16,45,000 crore rupees. Okay, you can quickly download the PDF. Capital receipts are 16,45,000 crore rupees. Then debt receipts. Debt means government is going to borrow loans. 15,69,000 crore rupees. Market loans, government is going to borrow directly from the market. And then small saving and state provident fund. See, we as employees, we pay a lot of, we deposit our provident fund. My employer will deposit. If I'm working with public sector bank or if I'm working with government, provident fund deposits are done with the employees provident fund organization. Government takes out money from that. Market loans, government borrows money from the banks in the form of government treasury bills, in the form of government bonds. Okay, we read about government bonds in the newspaper also. So that money plus this money. Now here comes an interesting term, what we call as crowding out of private sector. I had shared this term on the Telegram before coming live. Crowding out means when the government borrows excessively, it leads to private sector being crowded out. Like in the Kumbh Mela, when somebody is pushing others and going at the first to get the holy bath, when you are pushing everyone aside, that means you are crowding everyone aside. When the government secretary, finance secretary, government ministry says we want to borrow more, when the government's fiscal deficit increases, it leads to crowding out. Okay, that crowding out leads to the effect that private sector will not be investing as much as government will be investing. And when government invests more, government has to recover money. Government has to recover money by excessive taxation. Got it? Government will levy more taxes. So that is why fiscal deficit hurts us in two ways. It deprives the private sector of the money that private sector could have borrowed from the banks. So what you can do with the PDF is you can pull out the relevant PPT slide from which I am teaching. Okay, so this is there. Now, market loans and everything, we have studied this. Money, where is it coming from, where is it going, how is the money being collected? Tax receipts, then gross tax revenue. Total gross tax revenue is 42,70,000 crore rupees, out of which it is customs, taxes of UTs. Okay, UTs because they are union territories, so the money collected by union territories in the form of taxes goes to the union government, union budget. Now, customs duty, duty levied on import of items into India. Customs duty, GST, GST is accounted for insofar as share of union government, union budget, union government in GST is concerned. Okay, union this much. Okay, taxes on income, income tax, corporation tax, tax levied on companies, Reliance, Ambani, Adani, Tatas, this tax. Transfer to NDR funds. Okay, National Disaster Relief Fund, etc. So those things are there. Then state share of taxes. Government is paying state share of taxes. Arrows that are inwards, they are increasing the revenue, and these arrows, they are taking away the money from the government. Outward arrows, interest receipts, etc. So this is, you can now easily understand. Just analyze the pattern, nothing else. Okay, this is the budget at glance. The figures that we've seen are now represented in the linear format. Now let's start with the income tax slab thing, and let's quickly move into the schemes part. See, zero income tax till 12 lakh rupees income under the new tax regime, NTR, it will be colloquially called. Okay, now national tax regime, earlier income up to rupees 7 lakh was attracting nil, zero tax. Now income up to 12 lakh rupees after accounting for the rebates and other things will not attract any tax. Is it a good thing? I would say it is a neutral thing. Why? Because the news that we hear about the inflation increasing every year, if anybody was earning 40-50,000 rupees per month in 2011-12, 10-11, if you compound it by 8% inflation every year, how much would the income be? If something was available for 500 rupees, if something was available for 50,000 rupees in 2011-12, today it is for 80-90,000 rupees. Agreed? Let's talk about gold. Even though gold is not something of importance, okay, talk about milk, bread and butter. Prices have increased exponentially. Rental cost has increased. So government now realizes that if anybody whose income was 50 to 60,000 rupees in 2010-11, if today he is earning 1 lakh rupees, he is living the same standard of living as he was living in 2010-11. So by periodically revising the income tax slabs, government is cushioning the people. Government is absorbing the heat of inflation as absorbed by common households like you and me. Okay, because our incomes have increased, but inflation has surpassed incomes, levels of income. So to compensate for that increase in inflation, these income tax slabs are revised periodically. Sometimes there is a delay of 3 to 4 years. Sometimes they are revised year after year with a quantum jump. Okay, so this is the bare minimum thing that the government has done for our purpose, right? So nothing to be too happy about it, but yes, it has come in as a relief to the people, especially when slowdown kind of situation is there. Now, what do we have to see from here? See it in this manner. It will increase the disposable income in the hands of people. Disposable income means if my gross income is, let's say, gross salary of a person A is 1 lakh rupees, out of which if he is paying 20,000 rupees as tax, for example, he is left with 80,000 rupees as disposable income. That means the income which he can actually dispose of, which he can actually spend. My income, I would say it's like 40 lakh rupees, for example, 50 lakh, 1 crore. But if 30% tax I am paying on 1 crore, my disposable income would be 70 lakh only. Disposable income matters when economy is facing the slowdown. Slowdown means quarterly GDP data shows that GDP growth number is coming down. To revive that, government needs to give more income in the hands of salaried class, middle class people like you, me, your parents, my parents. If we will be having more income, we will consume not Parle Ji but Good Day. Even though days are not good, we are preparing for UPSC, right? So that is how the income leads to increase in expenditure. My expenditure will be income of Britannia, Parle-G company. They will pay more tax to the government. So rupee, the economy works in a circular manner. Every rupee sent in the economy comes back to the government in the form of tax, if not paid by me, but paid by somebody else. Now today all the families are happy sitting in front of their TV, changing their channels. Oh, income tax is less. Today they would have ordered a pizza, for example, or Burger King, burger, McDonald's. They would have gone for a party, maybe, because it is weekend also. But the expenditure that they are spending on the restaurant, money that they are spending on the restaurant, government will levy GST on it. Government will levy income tax on it. So understand the concept part of it. Money will come to the government only. It's just that money is going to change hands and then come to the government, right? How many of you are able to understand this? So this is how the things rotate. My purpose here is not to just shout with like other news channels and other YouTubers. My endeavor has always been through my teaching career, whatever little I have taught, to explain things, because by doing so, the concepts that I have learned, I'll be transmitting those to you. Those will be yours now. Okay, and when you apply them in the exam situation, chances of you turning out to be correct are higher. So that is how. Don't go by these things. Don't go by these prima facie things. Income tax slabs. UPSC is not going to ask this. How much is the income tax slab with on 5%, on which 5% tax is levied? They are going to ask the concept behind it. What is the concept of disposable income? Another point is inflation is a tax. Inflation is a tax on our income. If the government spends more, there is more money in the hands of everyone, we would have to pay extra money to buy the same amount of goods. Okay, so this is there. So then how it's written that in 4 to 8 tax slab 5%. See, this is just a reference. Okay, this is of the old slab. Okay, this is the new slab. Okay, now moving further, where does the money come from? We've seen this. Now quickly talk about Union Budget 2025. Imported flat LED TVs. Price changes after. Costlier. They are going to be imported flat LG Samsung TVs whose panels are being imported. Okay, flat TV screens, LED screens that you have. Imported knitted fabrics. Knitwear fabrics again. Cheaper cancer drugs. Cheaper critical minerals. Mobile phone chargers will be cheaper now. Telecom equipment will be cheaper now. The equipment in the form of Wi-Fi devices or big towers or receivers, encoders, decoders that are used by telecom companies. Fish and shrimp feed, frozen fish paste, cheaper. Wet blue leather, again wet blue leather. How is it made? Why the name wet blue leather? Please note it down. Out of 100 things that I'm going to tell you, 2 things will definitely be asked. This is UPSC, but we have to study 100 in order to be in the safer zone because we have time. Technical textiles. What are technical textiles? Why they are named as technical textiles? EV batteries. All these things are going to be cheaper after this budget. Got it? Now, key features of the budget. Let's start with the section B of our budget analysis, schemes and policies. Okay, new institutions that have been created. Government says we need to become Viksit Bharat. What in literal sense it means? It means we need to be a developed country. We need to come in the league of developed countries. So what do we need to do in order to become developed country? Accelerate growth. How are we going to accelerate growth? Increase the pace of growth. Now, my dear students, what is the target? Growth rate has to be 8% on average decadal basis. Starting from 2024, 2025, we have to grow at an average pace of 8% for up till 2035. This way, we will be having an average decadal growth rate of 2035 till 2035. We will be having, we will become developed country. What is the criteria for developed country? What is the criteria according to you? Everybody, every household should have electricity, mobile phones. In nutshell, we should have enough per person income, per capita income, so that each one of us can enjoy these goods and can focus on our work life rather than women cooking food in households, rather than women doing household chores. Women should be able to earn. That is why budget says Garib, youth, Annadata and Nari. Poor people, if they are to be lifted out of poverty, we as a country need to grow by 8% every year. If the GDP is $3.5 trillion, $3 trillion, we have to be the third largest economy. How are we going to become that? Our income, per capita income is today around 2,500 US dollars, 2,300 US, 2,500 US dollars. It needs to go up to 15,000, 20,000 US dollars. That will be possible only if we have an average year on year growth rate of 8%. Today it is 6.4%. Economy is estimated to grow around 6.3 to 6.8% this year. I mean, financial year 25-26, this is the target. This is the range. And this range seems to be having a difference of just 0.5%. But if you see deeper, isn't it too big? 0.5% translates into lakhs of crore rupees. Because of global uncertainty, the bracket is wide. Now, how to accelerate growth? I give a funny example, maybe not so funny to you. If we give 100 chapatis to Anant Ambani, you recently saw his wedding, I mean a year now, what is going to happen? But right now means, see, that one is also estimated 6.4%. Again, it is as per the revised estimates. The actual growth for 24-25, we will get to know once we see the next year's budget, or once we will reach September, October 2025. Then the final number will come. Okay, as of now, it is estimated that the growth for year from 1st April till 31st of January is going to be this thing. Okay, now coming back here, how to secure better growth? If I give 100 crore rupees additional to Anant Ambani, is he going to eat 100 extra Parle-G biscuits or Good Day? No, there is a limit to which he can eat. Rather than giving more money to the rich people, we should include more people. So we need to secure inclusive growth. Inclusive means rather than concentration of wealth in a few hands, we need to distribute wealth to more number of people. The more the number of people, the more will be the consumption. If consumption will be more, production will be more. That is how we will gain additional levels of GDP. Enhance spending power of India's rising middle class. Next point is itself clarifying it. Second point says we need to have we need to include more people in the growth story of India. Zomato workers, just the Zomato owner becoming rich is not enough. We need to have gig economy workers, Zomato, Swiggy. These workers also need to get a higher share in the income of Zomato's owner. Economic survey also highlights this. Economic survey says that rich people's income as assessed through the increase in their profit is increasing, whereas the poor people, their income is declining, thereby leading to exclusive growth. Growth which is excluding majority of people. We need to include more people. That way our aspirational middle class, which wants swanky cars, which wants new motorbikes, which wants 24/7 electricity, new mobile phone. Today everybody is having Apple mobile phones. Why? If they are spending more, they are more confident. They are earning well and they are spending well. Government out of their spending is getting more GST revenue, more tax revenue. Okay, so invigorate private sector investments. We need to revive the private sector investments. What are we going to do this? These are the broad targets. I am trying to fill in the details to help you with two things. To help you substantiate these points and to understand how the budget is to be decoded. Facts plus clarity of what is to be studied. Okay. Right now, our investment rate is 31%. We need to take it to 35%. 31% is the rate of investment. That means for every $100 that we are earning, we are saving only $31. Investing $31 in stock market, in setting up new manufacturing companies, new leather plants, new dairy farmers. Every 100 rupees that they are earning, every 100 rupees that they are earning, they are investing back 31 rupees only. India is investing back, reinvesting 31 rupees. We need to increase it to 35 rupees. Then we will see the more the investment, the more will be the return, right? So this is what is required. Uplift household sentiments. If I tell you, you are definitely going to crack civil services with a glorious rank, you will study for 1 extra hour at least, right? You will study for 1 or 2 extra hours. Am I right or not? So someone when praises you, when your sentiments are good, you are feeling positive. When households are going to feel positive about their income, they will be secure, they will spend more, they will give their best. And if they will give their best, government will get more taxes, economy will grow at a faster pace. As the Prime Minister says, 100 crores Bharat residents of India, if they will take one step forward, India will take a giant leap forward. Right? I'm just trying to translate these technical things into simple language by correlating them with what the philosophy of the Prime Minister is. If 100 crore Bharatvasis will take one baby step, my Bharat will take 100 crore steps ahead. This is the philosophy. We need to uplift household sentiments. Now, moving further, journey of development, these are going to be the four engines of development for this year. Agriculture, MSME, investment and exports. Agriculture, why are we focusing on domestic sectors? Why not big companies? Why are we focusing on micro, small and medium enterprises? Because global economic scenario is not as good. That means our exports may not be as good. That is why exports have been kept at 0.4. Even though we have to export more, but if seen through the budget data, the outlay for production linked incentive scheme has been slashed. The budgetary allocation for production linked incentive scheme has been reduced from how much? 3,500 crore rupees to 2,800 crore rupees this year, even though new sectors under PLI have been added. What is production linked incentive scheme? To aid the exporters, to incentivize exporters with cashback, a kind of cash incentive for additional exports that they do. Now here, agriculture means whenever there are challenges in the globalization, in the globalized world, that India may not be able to export as much to the US. Indian companies, service sector companies which are having huge dependence on economies like US may not be able to do as good as they were doing in the previous years. So what should we do? We should focus on the domestic growth led model. Let's assume that we are a closed economy and we are now going to invest in agriculture, in which 50% of our population is still dependent on agriculture. So if these 50% people are empowered by giving financial incentives like cash Kisan credit cards, the limit of Kisan credit cards this year has been increased to 5 lakh rupees. Earlier it was 3 lakh rupees. They will be able to borrow more. So government wants to incentivize agripreneurs, entrepreneurs in agriculture. MSMEs. When global companies, the companies of India which are highly dependent on global contracts, Adani, Ambani, they are having exposure or their revenue coming from UK, EU, European Union, okay, US. Infosys company gets a lot of service sector contracts from the US. If they are going to face challenges in the form of H1B visa restrictions, Indians would not be granted visa, business visa, those kind of problems are going to be there. Then what should we focus on? We should focus on MSMEs. Again, an indicator that domestic growth led model is going to be followed this year, right? So this is how you have to decode budget. Every pointer here, every engine named here will have so many schemes under it. MSMEs limits have been revised. Once you understand the philosophy or pattern of budget, what is budget focusing upon, you have to just fill in the details under these pillars. Once you do that, task is done. It is not a rocket science. It is not as bulky as some renowned teachers of economy make it. You get my point where the hint is. You don't have to read 500 to 1000 pages. Got it? That is, their shop is running. Their code is being applied. But here you have to focus on the success code. Got my point? I've given you enough hint. Now, four powerful engines are agriculture, MSME, investment and exports. Fuel, what is going to be the fuel? Are reforms. Okay, our guiding spirit, inclusivity. The destination is, where do we have to reach? Viksit Bharat. Okay, we have to reach developed India. Okay, so developed India is the destination to go. Our guiding spirit is inclusivity. The more people will benefit from the inclusive growth story, better it is. Okay, now agriculture. See, each one by one, we are going to now focus on these pillars. Spurring agriculture, increasing agriculture growth and prosperity. We have to bring about rural prosperity. How to understand this? Why are we focusing on agriculture? See, when COVID was there, all the workers who were earlier working in the urban towns, in the factories and manufacturing units, they migrated back to their hometown. Agriculture became the mainstay of economy. That is the resilience. That is the reason we should have a diversified economy. We should not be over dependent on service sector. If service sector is contributing 60% of India's GDP, that is a dependence on European Union, Europe, Western world. We need to reduce that dependence. We need to have domestic engines of growth equally running. There are four engines of any sector: agriculture, primary sector, three you can say tertiary or other sectors: agriculture, service sector, manufacturing. Okay, then you have these culinary sector, etc. So we need to have diversified economic engines, so as to, if there is failure in monsoon, we can look up to manufacturing. If there are some challenges in manufacturing because of semiconductor imports from China, rare earth minerals, China is not giving us technology, US is going to impose tariff structures or not going to give us the technology in the form of artificial intelligence or GPUs, then we can rely on agriculture. Now, quickly coming to the agriculture sector related schemes, Prime Minister Dhan Dhanya Krishi Yojana. Okay, basically, Prime Minister's Dhan Dhanya basically means affluence, prosperity. Prime Minister's prosperity for agriculture scheme, in simple language, in English. Its aim is to cover 100 districts to benefit 1.17 crore farmers. 1 crore 17 lakh farmers are going to benefit from this. What are the components? Enhanced credit through KCC. Kisan credit card is the way for the farmers to get what? Is the way for the farmers to get institutionalized credit at a reasonable rate of interest. Farmers need money for cropping season, for sowing season, during the time when they want to sow. Earlier they were being given 3 lakh through Kisan credit card. Now they will be given 5 lakh rupees. Okay, they can borrow through the Kisan credit card issued to them by India Post Payments Bank or SBI or PNB. More credit, and then there is going to be CIBIL type of Credit Information Bureau of India Limited type of credit score focused on rural areas, so as to ensure that the wasteful subsidies, the revenue expenditure that the government is going to incur in the form of Kisan credit cards, money is not siphoned off by people who are not going to pay back. Okay, so now we are going to have CIBIL kind of a score for rural areas, for agriculture, for farmers. This will help the banks to see which credit card applicants, Kisan credit cards, are regular in the payment. But the problem is that governments themselves, they waive off the farm loans when the elections are around the corner. This is the problem. Anyways, facilitate short-term loans for 7.7 crore farmers through Kisan credit card increased limit. Okay, Prime Minister's Dhan Dhanya Yojana, mission for cotton productivity. We see a lot of suicides happening in the Vidarbha region, Maharashtra, Nagpur, Pune region. Okay, cotton farmers. So we need to have 5-year mission to improve the productivity of the cotton. So you have to read more about BT cotton. Okay, read more about BT cotton. Now, Makhana board in Bihar. Sometimes UPSC asks that budget is a political document. How can you say that budget is a political document? How can we say? To run the coalition government, you need to allocate more money through the union budget to those federating units of India, to those states of India which are supporting the union government in forming a stable government. Nitish Kumar is a partner in coalition, Makhana board in Bihar. The word Bihar appears 6-7 times in the budget this year. Okay, which is not good, but my endeavor is to explain you for your political science optional, for your public administration optional, and for your general understanding that budget translates directive principles into state policy, directive principles of state policy into schemes. So budget is a way to implement the political philosophy of the leaders, or to convert our constitutional ideals into policy documents, number one. Then, insofar as budget helps in running the coalition governments, so budget is a political document, right? So these are just examples. Then National Mission on High Yielding Seeds. We all know that the challenges in agriculture today are, number one, irrigation, number two, land deconsolidation, in a way fragmentation of land that is happening. So to stop this phenomena of fragmentation of land, what can we do? To stop this phenomenon, what can we do? We can increase the yielding capacity by sowing high yielding variety of seeds. For that we need to invest in the research. So targeted development of propagation of seeds with high yield, pest resistance and climate resilience. Okay, so now Prime Minister Dhan Dhani Yojana in partnership with states, enhanced agricultural productivity, adopt crop diversification. So we are going to have mission for 6 years for increase the production of pulses, crop diversification. Our green revolution is criticized for focusing on wheat and rice only, wheat and rice alone. Okay, but there is a huge potential in pulses, and in 2021-2022 we were importing a lot of pulses from Indonesia, Malaysia, Philippines, these countries, even edible oils. So we are not self-sufficient in edible oils also, the cooking oil that we use. So for that to be done, we are now focusing on crop diversification and sustainable agricultural practices. What do we mean by sustainable agricultural practices? Soil health card. Okay, number one, so that our soil's fertility is not depleting. Non-dependence on groundwater, non-groundwater dependence based agriculture. Okay, so these things are being done for the agriculture. Increase the post-harvest storage. We need to have more godowns, more storage capacity, okay, at the block level. We have these storage capacity at the district level. We need to have more warehouses at the district level. Warehouse. Then we need to have e-warehouse scheme. If the farmers are not getting right price due to a bumper crop, the farmers have a tragedy in their life, in their scheme of things. What if I work hard as somebody who's working in service sector? I will get extra payment. Of course I should. If a Zomato worker delivers 100 parcels, 100 packets a day, he will get extra money if he delivers 110 the next day. But farmers have got a problem. If they work hard and the crop happens to be plenty, bumper crop, their prices crash. So many people, therefore, they commit suicides or they leave agriculture because it is no longer remunerative. Sometimes the crops fail because of monsoonal vagaries, flip-flops, and sometimes the crops are so bumper that the prices crash. That is why we need storage facilities to give a confidence, to restore the sentiment of the farmers as the households. Garib, Annadata, Youth and Nari, 4 powers. Okay, so Annadata needs to be assured of his own ann, of his own platter. Then only he will work hard and remain in agriculture to ensure India's food self-sufficiency, guys. Right? Improve irrigation facilities, then facilitate availability of long-term and short-term credit. Long-term credit should also be there for farmer producer organizations for increase in food processing capacity in India. 35 to 40% fruits and vegetables, they rot, they go waste because of lack of capacity in India. Okay, so moving further, Atmanirbhar Bharat impulses 6-year mission with special focus on tur, urad and masoor. I'm reading budget, but as a teacher, I have to tell you that you should focus on geography also. What are the climatic conditions required? What are the areas where it is grown? That is how you decode budget. Otherwise, you are just reading the summary and later on you would say, I read the budget summary, no question clicked out of it. Okay, so tur, urad and masoor, development and commercial availability of climate resilient seeds, enhancing protein content, increasing productivity, improve post-harvest storage that we've seen. 6-year pulses mission, underemployment in agriculture will be addressed. Underemployment in agriculture. Earlier we used to talk about disguised unemployment, that where one person is required in agriculture, 4 are working. Now is the scenario that we are talking about underemployment. 1.7 crore farmers will benefit. Urea plant will be set up in Assam, a plant with an annual capacity of 12,70,000 metric tons of urea to be set up at Namrup, Assam. Okay. So this is there. Not to restrict green revolution benefits only to Khadar and Bhangar states of India, North Indian states. Assam. Green revolution in northeastern India. Again, the old mission, the old point in the previous budgets and economic service finds a practical mention in the way of practical step being taken towards expanding the benefits of green revolution to northeastern India. India Post as rural growth facilitator, rural community hub co-location. So rural community hub will be created. It will be co-located within the post office. What will be the function? Institutional account services. If you want to open the account in India Post Payment Bank, one thing, institutional form of credit will be given rather than depending upon commission agents. Farmer can borrow money from here. Direct benefit transfer seeding. If a farmer has got, meaning here is these post offices will now act as common service centers wherein the farmers can do hell lot of activities. Okay, application for direct benefit transfer linkage with the bank and Aadhaar card, between the bank and Aadhaar card, and EMI pickup point. Many villages are located at remote location. The only institution of government available in those areas is post office. Why post offices cannot be converted into cash collection point, EMI collection point? Farmers do not have to go to the SBI branch which is located 15 kilometers when they have a post office at 3 kilometers distance. Credit services to micro enterprises can be given through this thing, India Post offices. Insurance, Pradhan Mantri Fasal Bima Yojana, Pradhan Mantri Jan Arogya Yojana, insurance schemes could be availed from this thing, post office only. Why not re-christen post office as office for all the government services is the agenda here. Okay, assisted digital services. All the digital services, some people are not able to get their biometrics scanned because of toiling in the farmland, because their fingerprints have got erased. So assisted digital services, iris scan, if they have cataract, again digital services of all hues. They want to open a digital bank, they want to install Paytm, UPI, etc. All these assisted digital services will be provided from here. India Post as a rural growth facilitator. India Post with 1.5 lakh rural post offices. See the network, 1.5 lakh post offices complemented by India Post Payment Bank and a vast network of 2.4 lakh, 2,40,000 dark sevaks, postmen. So they can be repositioned to act as a catalyst for the rural economy. Okay, now they will be called as Vishwakarmas. They will meet the rising need of Vishwakarmas, the new entrepreneurs, women, self-help groups, MSMEs and large business organizations. So post offices to be rechristened as one-stop center, one-stop solution in the rural areas of all sorts of government problems, at least the financial ones. Now coming to MSMEs. A mother, I always give this example or analogy for you to understand. A mother having two kids, okay, one kid is younger and another kid is relatively elder, but the difference is only he is just 1 year and he is 1.5 years. Okay, he knows that mother is going to hold only one of them in the lap. Mother here is government. So 1.5 years old kid, he has a benefit in staying smaller. He does not want to grow in height. He walks 50 steps and says that my legs are cramping, my legs are paining. So that mother holds him in his lap instead of the younger one, smaller one in age. This is what is happening to India's micro, small, medium enterprises. They don't want to grow beyond this line. This line is the line of investments. Till the time they are below this line, they will get benefits. The moment they jump this line, government will not give the benefits of concessional rate of interest on loans to them. So they deliberately want to stay smaller. Now government has realized this over the years. What the government has done is investment limit and turnover limit increased by 2.5 times and 2 times respectively. Okay, micro, small and medium enterprises. Let's quickly move on to this part only. See, earlier an MSME would be considered as micro when current investment is just 1 crore rupees. Currently, it is the norm. It has been increased by 2.5 time multiplier, 2.5x. Now, if in any micro enterprises you have eaten that Uncle Kulfi, normal, not the quality walls, we are talking about local kulfi ice cream making factory, they will deliberately, knowingly not invest more than 1 crore, because if they invest above 1 crore, they will not be considered as micro, and they will have to comply with, they will have to fulfill a lot of regulatory formalities. They will not get cheaper rate of interest. Okay, that is the problem, that now government has realized to increase their investment limit. If in a factory now the investment is more than 2.5 crore rupees, they are eligible for still. Okay, now small enterprises, earlier up to 10 crore rupees was the investment limit. Now the investment limit has been revised to 25 crore rupees, 25 crore rupees in small enterprises. Okay, 25 crore. Earlier it was just 10. Now 10 is gone. Okay, then medium enterprises, 50 crore rupees was the limit. Now the limit has been revised to 125 crore rupees. 125 crore rupees if they are invested in any factory which is making knives, sketch pens, cups and crockery, okay, glassware, clocks, anything of that nature. I'm seeing things around to give you the examples. So if any company is making watches and clocks, etc., smaller ones, if they invest up to 125 crore rupees, they will still be considered as medium enterprises, so that they do not have an incentive in remaining small enterprises. They should grow, they should aspire to become big companies. What is turnover? If the total sale of a company earlier was up to 5 crore rupees, it was considered to be micro. If the sale increased above 5 crore rupees, it will be considered bigger, small. So now the limit has been increased to 10 crore rupees. So how do we gauge if a company is big or small? How do we assess? Either on the basis of how much investment they have made, number one, investment, or how much sale per annum they are having. Both these criteria have been revised now to incentivize micro, small and medium enterprises. Okay, now see, 50, turnover is 50, and then revised turnover criteria, earlier it was 50 for small enterprises. Now it has been revised to 100. I have provided the PDF on the Telegram channel so that I do not have to write. Okay, Anshu. still it's good that you are able to access online education facilities thanks to the advent of internet, that people who do not have post offices in their areas are still able to access the education thanks to online platforms like PW, for giving us the opportunity to reach out to people like you, so that we have a Lincoln who does not have the light in the electricity at his house but is still studying under the street. Now the times have changed. You are the Lincoln of the present era, that you do not have the basic facilities like post office, etc., but you are able to access internet. Now coming back, investing in people, Saksham Anganwadi and Poshan 2.0. Increased funding for better nutrition. 50,000 Atal Tinkering Labs in government schools in 5 years. Atal Tinkering Labs in government schools. Okay, so basic R&D facilities to live up to the mandate of try to correlate. Interlinking is the thing that you require in UPSC. Correlate in the sense that now National Education Policy of 2020 is sought to be implemented through these tinkering labs, etc. Okay. BharatNet broadband to be provided to all the schools and primary health centers, so that they have diagnostics, they have internet connection to provide better facilities. Done. Bharatiya Bhasha Pustak Scheme, digital Indian language books for students. As my one of the students, he just now said that he does not have a post office. Can we expect him to have a school in the neighborhood? Anshu, do you have any school in the neighborhood? God, I mean, it would be better if you say yes. But see, if many people, because of the fear of English or fear of not being taught in their vernacular language, they drop out. They do not study because they are not able to comprehend or understand any other language than their own mother tongue. That is why digital Pustak scheme, digital book scheme for students. 5 national skilling centers, global expertise for Make in India to be channelized into Make for the World. Earlier it was Make in India, that was enough for India or for outside India. Now it is to have 5 skilling centers so that our citizens have, our youth, our demographic dividend can be converted to match the skills required in the industry today. Okay, so that is why Make in India for Make for the World. Atal Tinkering Labs to be established in government schools over the next 5 years, so as to empower, so as to impart the budding citizens, the young citizens of India with the skills of R&D. Okay, IIT expansions. Our IITs are going to be expanded. We are going to add 6,500 seats. When IITs are world-renowned institutions, why have only 3, 4, 5,000 seats? Why not double it? So now this is there. Okay, AI in schools. 500 crore centers of rupees 500 crore for the Center of Excellence for Artificial Intelligence in Education. So artificial intelligence in education will be imparted. Medical education, 10,000 new MBBS seats. Government realizes that we have a National Health Policy 2017, okay, which aims to provide better health facilities, but any kind of facility without sufficient number of well-trained doctors is not going to work. Insofar as doctor to population ratio in India is concerned, WHO says 1 is to 1,000 doctors are needed, but in India we have 1 is to somewhere around 1,300 to 1,400. For every 1,300 people, we have just 1 doctor. Okay, I cannot write at the border because then it will again make a sound and then screen would get minimized. Okay, PM Swanidhi. Street vendors, they face a lot of challenges in, like farmers, in getting institutional credit because they do not have a credit history. They are not receiving their payments in bank account. UPI linkage, okay, if they are linked with UPI, they will have some Paytm transaction history, balance history, so as to show to the bank that they also deserve a credit card. because they are making money, they are making turnover, sales, as we saw in the MSME. If they are earning money, bank will say, yes, this person will be able to pay at least 30,000 rupees, which he is borrowing on the Swanidhi credit card. Okay, so these people, I tell you, you see people in working in the weekly markets, Friday market, Monday market, Saturday market, Sunday market. These are flea markets. Okay, so if in these flea markets, if you want to set up a shop, you want to buy, if I'm selling plastic wares, I want to buy buckets, plastic wares like mugs, etc., which are required for the household items. I want to set up a shop. I have been allotted the shop and street vendor ID card by the municipality, but I do not have money. I will borrow 5,000 rupees in the morning, get the items at the wholesale price, and of that 5,000 rupees, these poor street vendors have to pay 6,000 or 7,000 in the night when they wrap up their shop or their stall, because they lack the institutional forms of credit. This was realized by the Prime Minister, and they came up with the scheme Swanidhi. Swa means self, Nidhi. Okay, they should be on their own. Street Vendors Act Nidhi, so that they can get money easily on the basis of the card. This card would be UPI linked. On the basis of their transaction history, they can produce a statement of transactions that they are doing 300, 400, 500. Every week they set up, every day, Monday it is Karol Bagh, Tuesday it is Rajendra Nagar, Wednesday it is Moti Nagar. So every day they are spending a shop somewhere, stall somewhere and earning money, but still they have to pay a very exorbitant rate of interest for just one day, 1 week, 1 month. To save them of their hard-earned money, this has been done. Social security for gig workers. UPSC mains question: Do you think that technocratization of platforms, Amazon, etc., do you think that arrival of these gig platforms has led to informalization of Rastaman Gudape? What are you saying? I didn't get your comment. Okay, so where was I? I lost my thought. Okay, gig workers. Do you think that gig economy has led to informalization of work? What do we mean by informalization? When a worker is earning on the basis of per day. Today he has work, tomorrow he wakes up to the notification on his application, Blinkit or Zomato, that today you don't have any deliveries. Urban company. No electrician is not getting any calls on the day. Uber, Ola drivers, no taxi rides on a given day. This kind of a phenomena has led to an informal association between employer and employee. What is the formal way of work? Formal way of work is when you have a predictable work every day or predictable salary every month. Even if there is no work, the worker will still get the salary within the first week of the month. That is this thing. Okay, so this there. Okay, you getting my point? So this is there, right? So e-shram registration. Now these gig workers, Zomato, Swiggy workers, gig workforce in India, retail and trade sales, 26, 27 lakh poor workers who come on bikes, who very cautiously they drive through the traffics in Delhi, Mumbai, Chennai, Kolkata, Hyderabad, Bengaluru, and they deliver the parcel. Still they have lack of security. So that is why government has now extended Pradhan Mantri Jan Arogya Yojana benefits to these risk takers, to these bikers, to these punctual guys who deliver on time, so that we, the urbanites, are availing their services. Now, some of them are in transportation, 13 lakh, finance and insurance, 6.3 lakh, manufacturing, 6.2. Okay, so this is how Niti Aayog data and all, you can take it from the slide only. PM Swanidhi, loan tenure of 1 year, 30,000 rupees limit on UPI linked credit card. Interest subsidy at 7% on timely repayment. So Interest rate otherwise is 8 to 9%. Even if I have to borrow a loan, I will get a loan around 8 to 9%. But if they keep on repaying at time, they will get concessional interest rate of 7%. Higher loan eligibility on timely or yearly payment. So first year, they will be given a credit limit of, let's say, 30,000. If they pay on time, second year, they will get a limit of 40,000. Next year again they pay on time, their limit would be revised to 70,000. Interest rate 7%. This is the benefit of being regular in payments. So government is in a way subsidizing or appreciating the loyalty. Okay, striving PM Street Vendors Atmanirbhar Nidhi. I have incorporated this screenshot with the beautiful pic of our image, a Prime Minister's image. You can read the features yourself. Now, investing in people, economy and innovation. Saksham, Anganwadi and Poshan 2.0. I hope you all have downloaded the PDF so that I don't have to write because some of the text is not as clearly visible. Poshan Abhiyan 2.0. What are its features? You need to be thorough with it. Okay, expansion of capacities in IITs. 6,500 additional seats in IITs. Daycare cancer centers in all district hospitals. So incidence of cancer as it is increasing across the population, daycare cancer centers. Bharatiya Bhasha Pustak Scheme. National Centers of Excellence, 5 National Centers of Excellence for imparting skills with global expertise and partnership. We had National Skill Development Mission. So why this? This is required so that the skills in AI, the contemporary technologies, the requirement of industry could be fulfilled. Okay, now Atal Tinkering Lab Center of, okay, we are skipping out on this. We've already seen all these points, right? Public-private partnerships in infrastructure. Infrastructure like roads, railways. Mr. Nitin Gadkari is all praise about himself, not Mr. Modi, right? So what is happening? 3-year pipeline of PPP projects encouraging state participation. So public-private partnership for better rail, for multimodal transport. Okay, multiple modes of transport. So infrastructure related ministries will be clubbed up together. Ministry of Road, Rail, Transport. There are 4 ministries. Another question, do you think that there should be one unified Ministry of Transport instead of having Ministry of Shipping and Inland Waterways, Ministry of Roadways, Ministry of Railways, Ministry of Civil Aviation, then Ministry of Road Transport and Highways? 4 or 5 ministries. They are working at sometimes cross purposes. Okay, Roadways Ministry constructs a national highway. Later on, Railway Ministry wants to construct an underpass. Integrated planning will be there. Okay, so this is how the ministries of electricity need to club up. Ministry of New and Renewable Energy, Ministry of thermal, the Ministry of Coal, then Ministry of your electricity, the power ministry that is there. They can be integrated to bring about minimum government, minimum government, maximum governance. Okay, so these things you can pull out from the budget itself. Support for state infrastructure, rupees 1.5 lakh crore allocation on the 50-year interest-free basis. State governments like Punjab, Haryana, UP, Madhya Pradesh, Bihar can borrow for capital investment in the infrastructure. This is called as cooperative federalism. An example of cooperative federalism, budget as a political document, cooperative federalism. Okay, so this is there. Now, capital expenditure and reform incentives. Asset monetization plan 25 to 2030. See, governing a country like India is very difficult. Even if the Prime Minister is honest or he does his best, if they disinvest from the public sector undertakings, if they sell off the public sector like LIC companies share, or they dilute their shareholding, government's shareholding in SBI, they are criticized that government is selling the family gold for daily ration, for Manrega type schemes. Manrega is not creating any asset, but to run Manrega, you are selling the shares in the LIC, one of the top performers of Government of India undertakings. That is why government now came up with a model that rather than outright sale to private sector, we will give them on lease for 99 years, 25 years, or 50 years, so that the tenure of the lease is long enough for the private company, Reliance or Adani, to invest in the upkeep and maintenance of that asset. Be it a road project, be it a railway line from Srinagar to Kanyakumari, cargo rail line. Okay. Now, Shubham Singh, you are asking, sir, how to know which questions will be asked. In the very first half an hour of my budget discussion today, I have already discussed this point. Okay. Rastaman Gadappe, if I am pronouncing your name correctly, I have to entertain a few of these questions. Bache, my lectures, sometimes I am criticized for teaching too much. But my endeavor is not just to come up like another YouTube educator, just to teach things and get views. My idea is to not just enable you, my idea is to empower you to get to know the skills. Every time I'm correlating it with the things like cooperative federalism, how to apply things in mains. Then in the first half an hour, I spent 5 minutes, 3 to 5 minutes on how to utilize the knowledge, what can be asked from budget and prelims, and line by line also, I'm telling you how can the question be framed around prelims. Okay, suppose if tur dal is there, government is going to have a pulses mission, what are the advantages of consuming tur dal? Okay, likewise. Okay, Jal Jeevan Mission extended till 2028 with enhanced funds to have tapped water supply to every household in India. Okay, yeah, so this is there. 1 lakh crore Urban Challenge Fund, cities as growth hubs. Urban Challenge Fund has been created so as to deal with the problems of sanitation, slums, and water, sanitation, etc. So this fund has been set up for the cities to come up with this thing. It can be linked with Smart Cities Mission. There is no extra allocation for Smart Cities Mission this year. Okay, now. So Jal Jeevan Mission to achieve 100% coverage. Some things are not visible. You can download the PDF. So this is how you can go through all these sectors, right? I think we are exceeding time already, 1 hour and 50 minutes. A lot to go. This, I have given you the pattern as to how to cover this up. Okay. Investing in innovation, like then your research development. If need be, go through. Yes, smart cities. Okay, this small thing is there. Okay, if need be, I'll take an extra other lecture. We'll spend 1 hour more tomorrow, or tomorrow being Sunday, I can allocate some time. Okay, so I'll spend some more time, and for economic survey also, and for the remaining part of budget also, I will incorporate one part every day in the daily current affairs class. Economic survey, my excerpts, my this knowledge, interlinking, etc. I'll share it on the Telegram channel. Whatever experience I've had in the prelims, mains, interview stage, I'll share it with you through the number of days in the coming days, so that you can get the idea as to what is expected of you from budget and economic survey. Okay, why economic survey? Because it is the government of India's own official document, and we are preparing for the government exam, so we need to go by that data which is authenticated by the government. There are a lot of reports castigating, criticizing government, but we need to focus on the neutral thing. This is why budget and economic survey are important. Everything that remains will be covered either in the next class tomorrow. Please do comment in the comment section so that I can get one more lecture on the same. Else, I'll cover in the daily current affairs class that happens at 8 or 8:15 in the morning every day. Right, guys? With this, I take your leave. We've already spent so much of time, and it will be good on your part also to go through the entire PPT document that has been shared on the Telegram to get to know what else is there in the budget. The concept part, how to use the knowledge out of the budget, what type of questions are being asked, I have already explained. Time stamping will be done by the team by tomorrow or Monday. You can go through the budget speech according to the time stamping. With this, a very good night to all of you. Enjoy your Sunday, since it is 1st of February and you are starting the new month. If you are a sincere aspirant, prepare your plan for the next 26 days. This month is already having lesser number of days, so Sunday can be spent on planning for the rest of the month. This will help you stay on track, stay motivated. Don't make too lofty plans like Government of India plans. Otherwise, you will have to extend them like Jal Jeevan Mission. So better it is to swim, not to float. But swim on your own, have your own plan, and plan should be achievable in target. Thank you. Bye-bye.